Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our guests on the show. Joining us are Foram Parekh of Indiabulls Ventures, Samir Khalra of Target Investing, and Vinit Bolinshkar of Ventura Securities. Many thanks to all of my guests. Today on the show, we'll discuss what's worrying the pharma companies. The Nifty Pharma Index was among the top sectoral loser in trade yesterday. What's changed? Is this the time you start taking position, or is this something that you avoid? ITC, we discussed the numbers, how ITC has managed to react negatively to the numbers, has managed to recover a bit of ground in today's trade. Cigarette sales were healthy, but FMCG business probably didn't do as well as it was anticipated. The other one is Indusind Bank. Indusind Bank has gained today after a 9-day fall. It's seen nearly almost a 400-point correction in just a month. We analyze what's worrying investors in the counter, and lastly we ask our analysts to bet on one stock that they would want to bet on in this volatile and uncertain market condition. So that's something that we will discuss in today's edition of Hot Money. Let's start with the first stock. That's something that we want to talk about. Pharma as a pack has not been doing well. Today it's managed to rebound a little bit, but yesterday was down 5%, and the worries obviously was on the US probe in terms of pricing. That was one of the key reasons that happened. I'm not sure if there were some other reasons, but nevertheless, what's the view on pharma going ahead? That's what we'll ask. So Samir, I'll start with you. Pharma stocks under a lot of pressure. Yesterday was one of them. Sun Pharma intraday corrected 20%, ended down 10%. Is this a cause of concern that there's not ample liquidity to take flows in this sector, and are you concerned with what's happening in the sector?
So one is the flow system, as in there is a lack of buying interest from institution side. So that makes the seller desperate as the issues keep on increasing, because fundamentally if you see, balance sheet of a lot of pharma companies have stretched, especially in last couple of years. So I think over there the managing of the working capital cycles are changing. The US FDA issues are not totally getting out of the system. They end up turning up. So I think even Sun Pharma, which we hold even today and added yesterday. So I think over there also there are certain issues which will take a couple of quarters. So I don't see any incentive to buy as of now or add at a larger extent. So I think couple of quarters, just give it a time and then see how balance sheets work out.
Okay, so apart from Sun Pharma, is there any other pharma stock that you have bought for your client's portfolio? Are you recommending to accumulate?
As of now, not anyone which we liked on the balance sheet side. P&L, there are revivals, but they are not coming on the cash flow side.
Okay, that's the view that's coming in. Foram, obviously, what did you tell your clients yesterday? I think some of them must have called you to find out what's gone wrong with the pharma companies. What's the trend on the pharma sector? Are you advising your clients to start accumulating in the fall that happened yesterday, or is it in a white?
Yeah, so we are telling them to go for selective pharma companies, because as we know that trade war talks are happening between US and China, and there are worries that once the new government is formed, then US might have those pricing pressure on the pharmas over there, companies, medicines over there, and it will directly impact our Indian pharma companies. So probably that is one of the worry on the pricing side over there, and we feel that of course US FDA issues are there for most of the pharma companies, but we would want to concentrate on those set of companies which does not have much of US FDA issues. For the likes of APIs, now we know that when the Chinese economy is not doing good, the direct beneficiary would be the Indian API companies, and that is why the API sets looks good. Also, for the likes of Dr. Reddy's and Glenmark Pharma, they have reported good set of numbers if you see even on the 9-month basis. So those are the companies that we can definitely buy at current juncture. Also Jubilant Life Science, which is predominantly into the pharma side, which is into generic pharma and into life science ingredients. So both of this space is doing really very good. Now the beauty of Jubilant Life Sciences, it is not just dependent on one set of medicine, wherein the regulatory issues takes place, so it does not completely get hampered. Why? Because it has different sets of medicine, so it is properly hedged over these kind of issues. Moreover, it is manufacturing, via acquisition, it has done a lot of manufacturing in the US side. So I think it would be immune to all these pricing war and the tariffs that gets imposed on the products, pharma products. So that is why we like Jubilant Life Science from the pharma space. The fact that that this correction has given a very good opportunity, because even valuations are very attractive. I think ROE is also from the single digit has come to double digit. Margin expansion is there. Debt is a tad bit higher, and one more negative news was the management did spill the beans of getting listed on the Singapore exchange, I think, which has been called off, and that is why we are seeing negative reaction in the stock. But then having said that, I think management is trying to look to list for in the Western markets for the likes of US and the European region. So that is like a secondary thing. But what makes us bullish is the fact that it is not just concentrating on one product, and that is why I think the fact that we have got the stock at 52 weeks low, we should buy this and capitalize on the opportunity.
Okay, on the news that came out yesterday in terms of this US generic US courts indicating that there are price cartels and all, is that a bit of a concern that you feel?
It would be a concern, of course, because the entire industry would get impacted. But then, as I said, this Jubilant Life Science has many products under its kitty, and it has a good market share also over there. So it has many options under its, No,
I'm not talking about Jubilant. I'm talking about the sector as a whole.
Yeah, so that is what is reflecting in the all the pharma space. So that concern is going to be there. But then we need to look at companies which are less exposed to US market. And I think it's all discounted in the price right now, because they're all trading at very lower levels.
Okay, Vineet, what's your sense on what happened yesterday? Should that be an opportunity? Some of them are still down in trade. Is this an opportunity to start accumulating?
So, pharma for me has always been a select space to go into. It's not a complete industry pack as such to play. I believe that the pricing pressure will impact large number of headline players, specifically those who have got a large exposure to US market. So here we like to go with a strategy of going in for the contract manufacturers who are doing R&D work. So we like DVs, we like Suven Life Sciences. We also like companies like Torrent, which have got a very relatively lower exposure to the US. And we also like Alchem Laboratories. So which have got a very good India business, and they got very high margins. So these are the 4 stocks that we would like to go with in the pharma pack. We would keep away from these stocks where there's a lot of uncertainty. There's a lot of growth story in all these 4 stocks. So when you have got insulated growth, why go for contentious issues? So we like to be with these stocks.
Okay, that's the view that's coming in on the pharma space. Again, be selective seems to be the trend that our guests are speaking about at this point of time. The next the next stock actually we want to talk about is ITC. Came out with numbers yesterday. Operationally not the best of numbers, did manage to correct over 2.5% in trade yesterday, but the volume growth as far as the cigarette is concerned, that somehow the analyst community feels is strong enough. What should one do with ITC? We'll ask our guest. Foram, ITC, what did you make of the numbers? What did you recommend them to do after seeing the numbers?
So ITC, I feel, has come with a very good set of numbers, and it's been the second quarter in a row that it's growing, nicely, and that too in the non-cigarette segments. If you look at the paper side and the restaurants and the hotel occupancy rate and everything is growing at a very good double-digit growth rate. Cigarette business is growing, but then I think once the tax gets imposed in the new budget, probably then it would again get impacted. So the cigarette business volumes would get impacted, of course, because of a higher price. So the fact that even the non-cigarette segments are doing good, so that gives like a breather to us, and that is why we would want to look at ITC from here on, because on the valuation side, it's trading at very attractive levels. I think it's trading at good P multiple as compared to the peers, which are like exorbitantly valued. So purely on the valuation basis and the fact that the non-cigarette businesses are also doing good for the second quarter in a row, so it gives us a confidence that yes, ITC will continue to report good set of numbers. So we are bullish on ITC.
Okay, that's the view that's coming in on ITC. Vineet, what did you make of ITC's numbers?
I was very pleasantly surprised, and I believe that we are going to go in for a very strong earnings trajectory, both in the cigarette business as well as the non-cigarette business. So if you notice, the cigarette business volumes are up 7%, okay, 8%, 11% YOY. QOQ also there's been a growth of 7%. Secondly, if you bifurcate the volume, the EBIT, for cigarette and non-cigarette, you will find that the non-cigarette has grown from roughly around 500 crores to 750 crores YOY. So there's a good jump out there. So we are seeing a lot of traction come in. All the non-cigarette businesses are growing into double digits, and they're all gaining growth. Also, if you notice, there was a lot of commentary in the ITC numbers vis-a-vis the unorganized market, where there's a lot of smuggling happening. So I believe that there could be a kind of a possible climb down on the smuggling part of it, in which case ITC would gain from market share. GST numbers have been very strong, so I do not expect too much of a price hike in terms of duties on cigarettes, and that will give the boost to numbers. So with the non-cigarette growth firing, I think that the discount to the pack of FMCG will come down very sharply. So in a few years back, it used to quote a 20% discount to lever. So today we are 40 plus. So I think that can narrow down considerably.
Okay, and before I move on, what did you make of the weakness we've seen in the consumption space? Is that a concern for you given the high valuations? Not ITC, but the others.
No, definitely it is there. Definitely it's a concern area. And I think it is here to stay for another 2 to 3 quarters.
Okay, and what about you, Foram? Is that a concern that you all have once you start writing on these companies? Are valuations a concern for the FMCG sector? ITC is not expensive, but the others like a Britannia or an HUL or the other ones?
Yes, HUL is a little bit highly valued as, compared to its peers, but if we look at Marico I feel is undervalued, and secondly Britannia is also doing good. The fact that it has many new products in its pipeline and it's reaching to good geographies and everything, the return ratios are the best in the across the sectors. So I think that the kind of valuation it is there and the kind of fall that we have seen in the FMCG companies, it augurs a good buy. Even HUL, I would be a buyer at current market price because it has done acquisition of Horlicks brand, and I think that would get a new good product in its portfolio, new geographies. So although valuations are a bit higher, but then I think there is certainty in the demand. I feel that once the election thing is done, and once the result is out and all, and with a good monsoon also, rural demand will pick up, and I feel that Q3 might be a little bit affected. Q2 would be a little bit would be affected, but then H2 would be better than H1, for the consumption space, and that is why when we start discounting in forward, I would want to buy all these stocks: Britannia, HUL, Marico, even ITC at current market price.
Okay, and Samir, what's your sense of ITC numbers and your view on the consumption space?
So ITC numbers, I think they are good numbers. The only disappointment was the EBIT margin on the whole drag down versus the estimates. And I think cigarette volume growth has shown that this story of cigarette volume growth globally is going down. That is kind of arrested, and that story goes out of the valuations because it's been 2 quarters now. And I think even the EBIT margin has increased at least in double digits after like at least 4-5 quarters. And if you see the FMCG, everyone was concerned, even we were concerned on the EBIT margin of the FMCG products, and now that has improved YOY as well. So I think now ITC might get a better valuation. It might not narrow that much of gap between the HUL and the ITC valuations as of now, but I think at least a 15-20% upside in the medium term I see that.
Okay, that's the view that's coming in on ITC. I think the consensus view is that the numbers were good. However, valuation concerns still remain on some of the other FMCG plays. The next one we want to talk about is Indusind Bank. Pull up the counter. It's been falling significantly in trade. Today it's managed to bounce back slightly, but is IL&FS exposure weighing in on the company? What exactly is happening? It's down 30% in the last 9 months itself. Vineet, what according to you is the concern with Indusind Bank?
It's purely the NPAs and the exposure to IL&FS. Also, they have a very big exposure to the CV portfolio. So that can also weigh on the stock. So given that, I believe that, going with RBL Bank, which is available at a much cheaper valuation than Indusind Bank and got very, very good growth drivers, I think that is a stock I would replace in my portfolio with. if I were holding that.
Are you concerned with what's happening with Indusind Bank? Can it go the yes bank way, or is it stable?
No, it's not that desperate, but I believe that there may be concerns which are an overhang on the stock. Also, there's a change in the management impending very soon. So that could also weigh in slightly, who would be a replacement. So given these couple of factors and, better quality stocks available at like-to-like valuations, I think...
but even at this value, you feel valuations are not right at 1400?
I think it's a tad higher, although it's below its weighted average. But I think that, once you start plugging these exposures, I think it can come down a bit.
Okay, Foram, you're getting Indusind Bank almost 400 rupees cheaper than what it was. Is it a good time to start accumulating?
I feel it's a good time to start accumulating because even I feel that only concern is about the NPAs and profit getting affected because of higher provisions due to INFS thing. But having said that, the acquisition, the merger what they're doing with Bharat Financial, I think it's going to be a good one because via Bharat Financial they're going to get a good traction in the microfinance industry and the rural regions also. So having said that, I think commercial vehicle segment is also improving, and with the kind of infrastructure development happening within the country, commercial vehicle thing looks quite positive, and as a result the fact that the loan book is more skewed of Indusind Bank towards commercial vehicle, I wouldn't see much of a problem. And I think whatever problems are there of island affairs, commercial vehicle, it all has got discounted, and that is why we are seeing stock trading near 52 weeks low. So I feel that when all the private sector banks are trading near its lifetime highs, this one is trading near its 52 weeks low. So I think one should definitely buy in a staggered manner.
Are you seeing any kind of concerns because there's still no clarity on INFS because the management in the previous few quarters was hesitant to give out the numbers. We don't know what other asset quality. So are you concerned about the asset quality for Indusind Bank?
That is a worry because that's what we are seeing. Provisions are higher, but then I don't think so much portion of the loan book is skewed towards INFS thing. It would be I think 2000 or something odd crores, so that is discounted in the current market price, I feel, so from here on I don't think so there are much we need to just wait and watch. We cannot just comment like that, but I feel it's all discounted in the price, and that is why I would want to take a bet at current market price.
Okay, fair enough. That's the view that's coming in. Samir, what's your sense on Indusind? What according to you, apart from INFS, has gone wrong, and are you accumulating this for your clients?
So I think the rally went up too fast too soon, even preempting the kind of results they'll show or the system. And now when RBI has withdrawn the ILFS notice and NCLT has given that permission for banks to do it as needed. So I think now this quarter they might reveal the actual number or at least you can estimate in a certain way. Secondly, the number of BB and below is more important because that's where I see certain banks having 10,000, 15,000, 12,000. And that's where I think Indusind at these kind of valuations is still expensive because if that kind of loan book is at least 15,000 or 16,000, then the impact is much more harder on the provisions and the NPA trajectory. And I think then you'll take another couple of quarters. So I want to wait for the results and see how it impacts.
And any other private sector banks that you've told your clients to start accumulating?
So right now we are hold on buying anything new or adding anything.
Okay, that's the view that's coming in on Indusind Bank. Then the final stock we want to talk about is the markets are extremely volatile. The counters are moving in and have corrected significantly. We're asking our guest one stock that investors should bet on for at least a slightly medium to long term perspective in this current market scenario. Samir, what's the stock that you want to talk about?
So for me, it's always a boring stock, which is Petronet LNG. Which I think doesn't move with the markets that much on the upside or on the downside and plays along with fundamentals and more on the results. I think that is having an uptick in June in their capacity on the Dahej plant, and the Kochi is on the verge of being resolved. So I see a lot of growth momentum over there in FY20 and 21, which I think will convert into a better pricing because they don't have long-term contracts for the additional capacity. So right now the prices are higher in the spot market. So that benefits to Petronet. And I think next 6 to 9 months at least, while the volatility stays in the market, it's a better place to be.
Okay, Petronet LNG, what about you, Foram? What have you told your clients? Which stock should they start accumulating?
So we feel that IT sector is much better at current juncture because of course the kind of uncertainties that's there around the globe. So rupee is bound to depreciate from here on further, and we feel that the likes of Infosys, FSL, these are both mid cap, large cap IT sector. IT stocks looks good currently, and because rupee depreciation benefit is obviously going to come in their constant currency, and digital revenue of all the IT companies are picking up very good, and the growth is here to stay. Even management is guided for a good positive commentary on the digital revenue side. Also we see US economy is doing really very fine, though there are global slowdown, but then I don't think so US economy is going to slow down considerably, and that is why most of the IT companies have their businesses coming from the US side, and second from the European side. Brexit issues have also taken setback right now, so Europe being like a second most economy where they trade, so I think even that is being taken care of, and that is why I would still want to go on with the IT stocks for the likes of FSL. If we see, has reported very good set of numbers in FY19, and we expect FY20 also to be on a growing side. So FSL, which has come down considerably from I think 80s, 84 levels to 50 something, augurs a very good buy currently. And Infosys also, I would say, although it's not growing at much at what TCS is growing, but the valuations looks quite better than what TCS is trading currently. So then I would prefer Infosys and FSL from the IT pack.
Okay, Infosys and Firstsource Solution, Petronet LNG from Samir, and what's your sense?
So I would second with Petronet LNG.
Okay.
And we also like the other gas stocks. So there's a lot of news on Gujarat Gas which we are very positive on. That NGT has also weighed heavily on the Morbi clients.
Sure.
So I think volume growth is assured out there. And gradually as the gas economy unfolds over the next 5 to 8 years, we see a very secular kind of trend in volume additions happening. So gas stocks, particularly Gujarat Gas and Petronet LNG, are some of our topics. Okay,
that's the view that's coming in on some of the stocks which you need to watch out for in volatile markets. Obviously, some of the stocks that I mentioned don't have to do, are not very high beta stocks, so with the high swings in the markets probably won't react that way. So the slow and steady compounders are something that you can talk about. But with that, we timed out on this edition of Hot Money. Let me thank my guest. Samir, thank you so much for coming in. Foram, Vineet, thank you so much for coming in. Ask BQ comes up next. Stay tuned to Bloomberg Quint.